guys, it's Stock Curry, and there is a major shift coming to the stock markets. So let's talk about it. I'm about to get into the stock picks, and we're going to go over which stocks you guys should be shifting your money into so that you can continue to make money. But first, let me explain what that shift is and what's happening right now. But before I do, I want to ask you a question. And answer this honestly for yourself. You're watching this YouTube video right now. Are you watching this YouTube video because you're looking to gamble on something that might double in value over the next month? Or are you watching this YouTube channel because you want to make money? Let me ask you that again. Are you watching this YouTube channel to find some stock that might double over the next month, potentially? Or are you watching this YouTube channel to make money? It's interesting. Think about that question for a second. You get one or the other right now. The extremely high growth that we saw from October to January in the stock market is over. It's going to be dead for a few months. And there is a major shift coming. If you want to keep making money in the stock market, you need to jump into the shift now, ahead of time. Okay? So what is the shift? What's going on? Well, obviously we know the stock markets all went down today. The NASDAQ especially was down over 2.5%. I did a lot of research into this today trying to figure out what happened. Now, we know that in March and late into February through the beginning of April, then the entire month of March, we saw a major decline in high growth stocks. However, that was a little bit more on the manipulation side of things because short sellers came in and heavily shorted all of the high growth stocks that have run up. The thing is, they ran out of shares to short back in the end of April. So they can't short anymore. There's literally no shares available left to short. So why are stocks still going down? Well, as I went in and researched it, it looks like the current drop in the stock market appears to be a lot more natural. And so that actually is a lot more concerning to me because there's no hope that it's just market manipulation and everything will sort itself out. So I had to look at a lower, grander scale and try to figure out what's going on. And here's what I found. What I found is that money is being moved out of growth stocks and tech stocks as a whole. And that includes not only our high growth stocks, our penny stocks, but also they're being moved out of the larger tech stocks like Tesla and Apple, Facebook, Amazon, all those. Money's coming out of everything. Now, money doesn't just come out and sit on the sidelines. It always gets moved somewhere. So where is that money going? Well, it's not going into crypto because crypto is down today as well. And crypto is in a lot of the same boat as the high growth stocks that, crypto's kind of, we're in January right now, or maybe February. If you're going to compare it to high growth stocks in the market, we need a little bit of a pullback, a little bit of a correction here before we get back in. And so I think people are expecting that. A lot of YouTubers are starting to talk about that, and we're going to get it. So I'm just being patient on crypto for about a week or two before we jump in and get ready for another run up. But as far as stocks are concerned, if the money's not moving into crypto, then where is the money going? And what I found is the money is going into consumer goods mostly. It's going into pharmaceutical stocks, and a little bit of it is going to banks. Banks were kind of mixed today. The other thing is it's also going into gold and silver. So when I look at all those things combined, I'm thinking, okay, gold, silver, consumer goods, wow, those are the stocks that boomers love to jump into when they think a bear market is about to come. Well, economically, there are absolutely no signs whatsoever that we are going to enter a bear market. There's a little bit of concern about job growth not really being there, but I think a lot of economists, especially governors in certain states, are starting to see that the reason that jobs aren't growing is because most of the remaining jobs are low-paying jobs, and with the extra additional unemployment benefits, people actually make more money by staying on unemployment than they would make by going to work. And so there's this huge disconnect. In fact, 2 states in the country have actually now decided to end unemployment benefits and help get people back into the workplace. I know restaurants and retail stores, especially mom and pop shops, we're having a really, really difficult time right now hiring people because even if you increase wages, you're still not keeping up with unemployment. people literally make more money not to work than they make working. And so for the low-paying jobs in restaurants and in retail, it's just really, really hard to hire. And so that's where the stall is kind of coming from. But I think as more and more states sort of end unemployment and they get off all these extra unemployment benefits and they start encouraging their workers to get back into the workforce, that'll kind of work itself out and correct itself. So I don't really think that's the big issue here. I think the bigger issue is a huge concern about inflation. Now, if we saw high inflation, typically, historically, what would happen is the Fed would jump in, they would raise interest rates in order to curb inflation, try to keep it at around 2%. But the Fed currently has a very, very different policy than it has, well, since the 1970s. The current Fed policy is not to curb inflation. In fact, they're wanting inflation to run hot. So if interest rates stay low and inflation goes higher, what does that mean? Well, if interest rates do get raised, obviously banking stocks will go up and they'll benefit and they should perform quite well. But some banking stocks were up, some weren't. They were kind of flat. That whole sector was kind of flat today, which tells me that large institutions, they really don't expect interest rates to rise that much. They just expect inflation to rise, and that's it, just inflation. So if we get high inflation, and potentially we could get double-digit inflation, it's very, very possible, then the question becomes, what happens to the economy? What happens to stocks? Where does the money go? And how do we make money off of that? And the answer is pretty much what I said in the past, is that when you have a period of high inflation, you want to jump into consumer goods because the pricing of consumer goods will go up, but people will still continue to buy them because everybody needs toilet paper and toothpaste and all these sorts of things. They're not going to cut back on those. And so that's why consumer goods typically do extremely well during times of high inflation. The other thing that does well during times of high inflation historically is gold and silver, because as the value of the dollar drops, gold and silver will go up. Forex can also do well if people think that inflation will be limited to one particular country. And of course, cryptocurrency trading is Forex trading, so cryptocurrencies might do well as well. And so those are our possibilities, but mainly I'm looking at gold, silver, consumer goods, and then a little bit of pharmaceuticals. So that's kind of what I'm looking at right now. That's where boomers and large institutions have been moving their money over the past few days, is they're moving it all into consumer goods, gold, and silver. So should we be doing the same? Yeah, we probably should. I am actually going to be looking at my portfolio tomorrow, looking at some of my high growth stocks. I'm pretty much just left with high conviction, high growth stocks right now, but I do have SOS, which is one of my little gamblers out there. I still got MARA, which is not doing too well. So I've got a few that I might pull out of since I'm already invested in crypto. I don't think I really need to hold on to my crypto mining stocks. So I might pull money out of those and put those into consumer goods. There's a few others I'm thinking about, but I mean, my portfolio is getting kind of thin right now. I've really been cutting it down, but I might cut it down a little bit further and just give myself a little bit of exposure to consumer goods just to get us through a time of high inflation. And by the way, what I did is I went back and I looked at the last time we had high inflation in this country, well, really high inflation. It was the late 1970s to mid 1980s time period. And what happened was the same thing. I mean, at that time, the inflation rates were all double digits, 11% and up. And same thing, consumer goods, gold, silver, it all went up, while all the other stocks were kind of stagnant. And then what's really interesting is about mid-1980s, after we came out of this high inflation period and the country, we kind of got back under control, wow, the stock market shot up. I mean, it went way, way, way up, all the way to our famous stock market crash. And so all that said, we're going to have to focus on getting through this time of high inflation. And then once we get through it, get ready for a huge boom in the stock market. Now, if you're looking to double, triple, quadruple your money in the next few months, it's not going to happen right now. It's just not. You're going to have to play a lot more defensively over the next few months if you want to make money and you want to stop losing money. So I know this isn't exciting. I know that you guys just want to hear about a 25x or $1 trillion this or whatever. But here's the thing. I'm here to make money. I'm not here to hype stocks. I'm not here to pump stocks. I'm just here to make money. And I want to help you guys do the same. So it's time to get a little bit more defensive, even more defensive than we have been. And it's time to get ourselves well positioned to make some money. Now, I know you guys were asking me, okay, Scott, what are the consumer goods stocks we can be investing in? Luckily, Webull shows that to us. So I'm going to show you in just a minute what those consumer goods stocks are. So let's go ahead and get into today's stock picks. For those of you guys who are new to this channel, my name is Scott Curry. I used to work as an analyst for some large investment banks, and now I analyze stock picks from the top 10 YouTubers. I spend hours every single day watching YouTube videos from the top 10 YouTubers. I give you both the cliff notes from the top 10 YouTubers as well as my analysis on their stock picks. If anything I mentioned today piques your interest, make sure you listen to who I say talked about that stock and then go watch their video for the full details on what they said. Now, all I ask in return for putting all of this together for you guys is that you hit that like button, subscribe, and click the bell icon so that you can get notified when I release my next video. In fact, I'll give you 5 seconds to do that right now. All right, before we get into today's stock picks, I just want to remind everyone that I am not a financial advisor and none of the YouTubers I follow are financial advisors either. Today's video is strictly for entertainment purposes only. For those of you who are wondering, you are currently looking at the Webull desktop app. Webull is the app that I use for my trading, and it is also the app that I use in all of my videos. If you'd like to get 2 free stocks worth up to $1,850, sign up for Webull using my link in the description below. And when you sign up using my link in the description below and deposit just $100, Webull is going to send you 2 free stocks worth up to $1,850. All right, let's take a look at some of the consumer goods stocks that did well today to give you some ideas on what you might want to invest in. So this is actually a combination of consumer goods and the conglomerates that hold consumer goods companies. And so our best performing stocks were Berkshire Hathaway, Berkshire Hathaway B, Honeywell, which is ticker symbol HON, 3M, which is ticker symbol MMM, GE, which is ticker symbol GE, Illinois Tool, which is ticker symbol ITW, Brookfield, which is ticker symbol BIP, and Carlisle, which is ticker symbol CSL. So hopefully that gives you some ideas on what to invest in over the next few weeks. All right, let's get into today's stock picks. First up is DOGEUSD. This is Dogecoin. I wanted to mention DOGE because it's real close to its trend line, which has been a strong level of support over the past 4 weeks. Let me turn off the EMAs so that you can see the trend line clear. Right now, DOGE looks like it might continue dropping for about 3 or 4 more days, but then I do expect it to bottom out somewhere around 43 to 42 cents. If you sold your DOGE on Friday, you will have a great opportunity to buy back in the next few days. Next up is LTCUSD. This is Litecoin. This cryptocurrency is tradable on Webull. LTC is a fork of Bitcoin, and if Bitcoin is the gold of cryptocurrencies, then Litecoin is the silver of cryptocurrencies. Keen & Grace likes LTC because it made news after the price broke above $400. LTC has since dropped a bit. Now this pattern looks almost identical to what happened 3 weeks ago. 3 weeks ago we saw this big rise, this equal top the next day, followed by a sell-off, followed by about a week of selling. Once again we saw a big rise, followed by the same top, followed by sell-off, so we may very well get about a week of selling. And if I take off the EMAs, you will see a clear trend line here. About once every 2 to 3 weeks, LTC drops down to the trend line. So LTC could drop as low as $230 before it rebounds and starts going back up. Keen & Grace recommends dollar cost averaging in over the next few weeks. I think that's fine. You could also wait for LTC to drop back down to the 50-day EMA, which should be at around $275, and then start dollar cost averaging in. Next up is ABBV. This is ABBV, and Stock Mode chose ABBV as one of his 5 dividend stocks to own in order to live off of dividends. He said he thinks ABBV has underperformed, and he expects a lot more upward movement on ABBV. As a result of the recent underperformance on this stock, the dividend yield is 4.47% as of Monday's closing price. Next up is ALL. This is Allstate. StockMo chose ALL as one of 5 dividend stocks to own in order to live off of dividends. The dividend yield was 2.41% as of Monday's closing price. The PE ratio is also very low at 5.66, and even the forward PE ratio is only 10.61. Keep in mind that the PE ratio that is considered a good value is 15, so this stock has quite a bit of room to run up before it even gets to fair value. StockMo likes ALL as a base to any dividend portfolio due to the stability and the growth potential. Next up is BNS. This is Bank of Nova Scotia. StockMo also chose BNS as one of 5 dividend stocks to own in order to live off of dividends. The dividend yield was 4.45% as of Monday's closing price. And because this is a banking stock, this should perform well if Canada's interest rates rise. Next up is CRWD. This is CrowdStrike. This is a cybersecurity company used by banks and other large companies to help cybersecurity professionals manage threats. Keen and Grace let us know that CRWD just announced that they are going to be integrating some of their products into the Google Cloud in order to boost the security, visibility, and workload protection to joint CrowdStrike and Google Cloud customers. That could be good to help CRWD continue to grow revenues and get closer to profitability. Now, in the short term, CRWD is quite bearish, although it is near where it normally bottoms out, which is just above the 200-day EMA. Also, the MACD histogram has flattened out and the RSI is a little low, but not extremely low. It's hard to say what CRWD will do in the short term, but I do not think it will fall too much further. So I do think there is more upside potential than downside potential with CRWD. And if we take a look at tip ranks to see how much upside potential CRWD has, we can see that CRWD has an average analyst price target of $251.94, which represents a 34% upside from Monday's closing price. Also, there was a new price target of $256 that was just reiterated 4 days ago, which is slightly higher than the average. Next up is DKNG. This is DraftKings. They're an online sports betting company. StockMo said he does not see much more downside to DKNG from here. He thinks this is very close to bottoming out, and I completely agree. DKNG is currently at the 300-day moving average and is now only up 8% over the past 6 months. The only other time DKNG hit the 300-day moving average was at the March 2020 lows, right before it rebounded and started consistently hitting new all-time highs. I think now is an excellent time to buy DKNG or sell a cash-secured put. Next up is GS, Goldman Sachs. StockMo chose GS as one of 5 dividend stocks to own in order to live off of dividends. The dividend yield was only 1.36% as of Monday's closing price. But StockMo does think GS will go up about 50% over the next 12 months. And that makes sense given the fact that GS only has a PE ratio of 9.17 with a forward PE of 8.23. StockMo likes GS in a dividend portfolio due to the security of the stock and the growth potential. Next up is LNC. This is Lincoln National Corporation. This is the last of the stocks StockMo chose as his 5 dividend stocks to own in order to live off of dividends. The dividend yield was 2.42% as of Monday's closing price. Also, if LNC meets their earnings projections, StockMo said LNC would have to double in price by the end of 2022 in order to maintain a fair PE ratio of 15. Okay, now we need to talk about PLTR again. This is Palantir, and they're a data analytics company. Today, Tom Nash gave a response to the Traveling Trader's video that the Traveling Trader uploaded on Sunday. On Sunday, the Traveling Trader went through a number of points on why PLTR is being hyped up too much and why PLTR will not become a $1 trillion company and why the stock will not go up 25 times. Tom Nash, who is quite bullish on PLTR, responded today. Tom's first point was that he thinks PLTR is going to get a monopoly on large data analytics, and that is why they could reach a $1 trillion market cap, according to Tom Nash. Tom Nash also pointed out that he has a very long-term horizon outlook on PLTR, and said that you can't understand PLTR's value through a short-term perspective. Now, I personally believe that you can look at stocks with both short-term and long-term perspectives. In the short term, I believe PLTR is a dud. In the long term, they could do quite well, but they will have to become profitable first. And that brings us to Tom Nash's next point, which was actually a great rebuttal. Tom Nash said that PLTR spent 17 years building out their software, and they are just now launching it. That's why PLTR has not been profitable for the past 17 years. But Tom Nash does believe that they will become profitable soon now that they are focusing on sales and profits. And in fact, Tom Nash said that if you exclude their $1.24 billion of issuance of capital stock, that they were actually profitable last year. Notice how they issued $1.24 billion of capital stock and reported a $1.17 billion loss. Now, while it is technically true that PLTR would have reported a profit had they not issued shares, it still hurts shareholders as that will increase the number of shares outstanding, which dilutes shareholder value. Now, one thing that the traveling trader and Tom Nash both agree on is that PLTR will continue to grow revenues. Tom Nash reiterated that he has a long-term outlook on PLTR and that this is a long-term hold for him, while the traveling trader is, well, a trader, and he is looking for stocks to trade. Tom Nash admitted that PLTR is not a good stock to trade. So long story short, Tom Nash says PLTR is a good stock for a long-term investment. The traveling trader says PLTR is not a good stock to trade short-term, outside of selling some cash-secured puts. And guess what? I think they're both right. Now, as a long-term hold, this stock is ultra cheap right now. Take a look. We just hit the 300-day moving average. The RSI is well below 30. And so those two things combined mean PLTR is probably very close to bottoming out and would be a great time to buy in for a long-term hold. Okay, finally we have SNAP, which is Snapchat. Chris Zane recommended another put option on SNAP. He bought the May 14th $53 put option with a $51.04 break-even price. Now, Chris Zane did say that this was a day trade for him. He did exactly what I recommended in my live video on Friday, which was to buy the option towards the end of the day during the crucial 2 p.m. to 3 p.m. time frame when options are cheapest, and he plans to sell Tuesday near the open when options are the most expensive. Now, I don't really know what SNAP is going to do from day to day, but I do think SNAP will drop back down to this very strong support level of $48.50. So a break-even price on the option of $51.04 is really good. I like this play as a day trade because if SNAP drops on Tuesday like Chris Zane thinks it will, then he will make quite a bit of money on this day trade. And if SNAP does not drop as fast as Chris Zane thinks it will, he still has 4 trading days for SNAP to drop below $51, which it has a really good chance of doing so. Alright, I hope you enjoyed this video and got a lot out of it. Comment down below what your favorite stock picks are. And if you want to get some free stocks, sign up for Webull using my link in the description below. When you sign up and deposit just $100, Webull's going to send you 2 free stocks worth up to $1,850. They're also going to give me 1 free stock, so it helps you out and it also helps the channel out. Finally, remember to hit that like button, subscribe, and click the bell icon if you haven't already. I hope you have a lot of success trading, and I will see you tomorrow.